Arlene asked me a question that I really wanted to make sure we covered. So she says, based on this Bitcoin cycle known as a 4-year cycle, and really looking at the last time that it really went up, which is about 4 years ago, when do we expect the price of Bitcoin, for example, to go up? And that kind of thing. And really, when people ask that question, what they're asking me is, what is the value behind this asset? And why are you so positive? What makes you so sure that this is going to go up in value? So let me kind of walk you through a really clear example of kind of the valuation that we can look at to anticipate what the numbers are going to look like. Because you probably have heard already, Bitcoin's at 30, 40, $50,000, and people are saying it's going to go to 100,000. It might go to 200,000. What causes? How do people know that? Why would they say that, right? And so what I want to do is I want to explain a very simple scenario to you, and you tell me if you understand this. There's a model called the stock to flow model. And really what that means is if you took an asset like gold, okay, Bitcoin is compared to digital gold all the time. And if you take an asset like gold and you say, look at all of the gold in the world, literally all of the gold in the world, all of the gold that's in the ground, that's already been collected, it's in your jewelry, it's in your electronics, right? And you took all that gold, it would equal this much. It doesn't even matter what it is. It equals this much. Okay, that is known as the stock or the supply, right? The total amount of the supply. And then you've got the flow. And the flow is the rate at which you can acquire that gold, for example, right? And so if you took all the gold in the world, well, hundreds and hundreds, maybe even thousands of years ago, I guess, really, people saw this metal on the ground and they could literally just stumble across gold and be like, oh, look, I found a gold nugget. And they pick it up and it happens to be a gold nugget. And that gold nugget is worth how much? Well, because it wasn't very hard to acquire, its value is pretty low. But over time, you picked up all the gold on the ground. And so you realize, wait a minute, this has value for some reason. And I'm using AirPod case. I don't know why. It's just the first thing I grabbed. But the reality is, in order for me to really want more of this, I can't just find it walking around. I need to take time, energy, maybe even some tools to start digging, right? And so it's going to cost me resources, time, energy, the cost of a shovel or a pickaxe, right? And the only reason I would spend money on that pickaxe is for the sole reason of, I want to dig into the ground to get gold. And the reason that I'm willing to spend money to get that gold is because I believe that gold that I find is more valuable than the original gold that I found, right? Not directly. What I'm saying is that original gold, because it was easy to find, had a value. Because I had to use resources to acquire this gold, it becomes more valuable, which also makes this more valuable, right? Because there's only so much of it. Well, early on, you can realize it's not a big deal. You can go get more gold, right? Fast forward thousands of years or hundreds of years, whatever the timeline looks like, guess what? Now we have unearthing machines, massive, powerful machines that are the sizes of a small building that literally just dig into the earth, massive scoops of the earth, and they dump it onto conveyor belts and they're shaking it around and they're trying to sort through to find the smallest amounts of gold. So now they're getting way less gold, but they're spending way more resources. Thinking about the manpower, the cost of that capital equipment, the diesel, the manpower, the salaries they got to pay so these people can eat. The only reason they would spend all this money to acquire little pieces of gold is because they know this is a scarce asset. And if they'll go down and get it, it will essentially go up in value because, again, it's scarce, right? And that's really when it comes to Bitcoin, that's what we're talking about. It is digital scarcity. Just like gold is scarce and it's a constant value that seems to decline decade over decade over decade. This is really the digital form of that, right? Now, there's a couple of pieces kind of written into the code of this that force this concept. But when we look at the stock and the flow, what we're looking at is there's all this, I'll say gold or Bitcoin, but there is a flow at which we acquire it, meaning that early on, hey, you could acquire the Bitcoin very easily, right? In fact, in 2011, someone bought 2 pizzas for 10,000 Bitcoin, I think it was. And every May 22nd, I believe it is, we celebrate Bitcoin Pizza Day because it was the first transaction really done as a medium of exchange, showing that somebody would accept Bitcoin for pizzas. Now, 10,000 Bitcoin today, I'm pretty sure you can do the math. It's costs more than 2 pizzas today, right? So it's a pretty expensive pizza, but that's different, right? There was a lot of it at that time. over time, there becomes less and less and less. And so the whole point of this conversation of this stock to flow model is this is a financial model we can look at. And I want to show you on a screen really quick so you can kind of see what I'm talking about. This, what you're looking at, is what is known as the stock to flow chart. It's developed by a guy named Plan B. You can follow him on Twitter if you want. His Twitter handle is right there. It's at 100 trillion USD. That's his Twitter handle. You can go check out all his stuff. He's a really fascinating guy. But what you're seeing is that blue line. You see how it kind of goes up fast and then it kind of starts to taper off, right? It has more vertical at the beginning and then it goes more horizontal. This is stock to flow. This is just like gold. Early on, you could acquire a lot of the gold. So you acquired a lot early on, but then it became harder and harder and harder to find the gold, but also you needed more and more resources to accumulate this gold, or Bitcoin in this example. And so this follows a very similar model. And I won't get into all the nerdy stuff, but basically what you're looking for is the correlation of the Bitcoin price. How does that correlate to the stock to flow model? And it has a very, very accurate correlation, right? And it has since the beginning. So really what we're looking at is we're looking at human emotion combining with the value of Bitcoin. So the blue line is the steady line, right? That is the true value of Bitcoin. And really what we look at is we say, all right, maybe early on the true value of Bitcoin was, as you can see right here, $1. Okay, so it's right around this spot right here. Well, what ends up happening is that's its true value. But just like with anything else, people who are late to the game, they have FOMO. They have this fear of missing out. And so what do? They're like, no, I got to get in. Look at Bitcoin. It just went, or any asset class. It just went like this. And uneducated investors or uneducated money says, I'm just going to get in. It'll just go up forever, right? And that's what causes this massive spike. Do you see this massive spike right here? Look at that. It went from $1 all the way up to whatever, $10, $15. Okay, just to keep the math easy here. But then, just like anything else, what goes up must come down. And so where does it fall to? It really falls to its fair value line. And so I say all that to say that really you can ride this wave, and this wave is broken into 4-year cycles. And the reason it's 4-year cycles is because Bitcoin happens to have a programming inside of its design to force the scarcity, right? Because you could always just be like, just make more Bitcoin, right? No, not with Bitcoin specifically. There is a specific amount of supply that it has. And there's 21 million Bitcoin that will ever be created, or the term in crypto is called mining, right? Which is how they produce the Bitcoin. We could talk about that in another video. But the bottom line is every 4 years, there is so much, and every 4 years it cuts in half. And 4 years later, that amount cuts in half, that amount cuts in half, that amount cuts in half. Now, without getting into the details, really what you need to know right now is the amount of Bitcoin produced every 4 years gets cut in half. And so that's what causes the upward pressure to kind of, not go up as high, right? Because there's only 21 million. And as we get going farther into the future, every 4 years, instead of this much being created, it's this much, then this much, then this much, right? Smaller and smaller amounts. The only reason someone would consider running this Bitcoin network, right, spending energy and resources to keep this thing afloat, is the same reason that you would get an unearthing machine to dig into the earth and go and discover more gold, because of the supply and demand model that's built in to this concept. And so the price of Bitcoin will continue to raise really all the way up until all the Bitcoin are mined, just like gold. Once all the gold is mined in the world, that's a scarce asset. It will continue to go up in value because there is no more, right? And you got to think too, this is kind of an aside, but Elon Musk once made a comment about how they've discovered a meteor, and that meteor is like 90-something% gold. And so he made some silly comment about, well, we'll just go get all that gold and we'll bring it down to earth, and that will just destroy the value of gold, right? You know what the problem with that concept is? What resources do you need to go get all that gold? You need rocket ships. And how many trips to this thing, chipping off all this gold, how much gold could you really bring back in each trip? And so the number of resources to acquire that gold will be offset by the fact that, yeah, there's more gold, but it took that much more resources to acquire it, again, ensuring its value and ensuring the continuation of the price. Now, that doesn't mean it goes up every day. As you can see, in this kind of cyclical nature, we could talk about what causes the waviness. But the bottom line is, over time, if you bought Bitcoin right now and you said, I'm going to hold it for 10 years and I'm just going to forget the fact that I bought it, there's a really, really insanely high likelihood that it'll be worth 5 times, 10 times, 20 times, 100 times the price that you bought it at, right? So really, when we look at this, right now we're in the part of the cycle to where Bitcoin has gone up to 64,000. And if you're watching this in the future, 64,000 might magically sound like this really low number. What do you mean you bought it at 64,000? And then it fell all the way down to 30,000. How could that possibly be, right? And that's a whole other conversation. What you got to understand is, due to this 4-year cycle, you can pretty much predict where it's going to go. And right here, do you see this flat line at the top, right above where it says price end of day? Okay, that right there is the true value of Bitcoin, meaning that its value is derived from its scarcity plus what resources are required to acquire more Bitcoin. And so you have this model, because there's a halving, it kind of flattens and then it goes up because, again, there's less now, and then it'll flatten off and it'll go up. And that's what the blue line does. You can kind of see that here, right? It goes flat and then it goes up and then it's flat again. Well, this flat line is right around $100,000. Okay, so the true value of Bitcoin since May of 2020 is going to $100,000. And so people who look at Bitcoin and they say it's never going to go that high, you're right. It might magically start to break this formula. But with the accuracy that this has been plotted with this many data points, it becomes pretty compelling to say, I think, on the other hand, it's going to be closer to that. And this is what is known as an asymmetric bet, meaning that when you put money in, the likelihood that it's going to go up over time versus losing money and going down over time is very high. So your risk is very low because you only have to put in, like you said, a little bit of money. For some of you, it might be $100. In fact, I would encourage everybody to take a small amount of money, whatever that is for you. It could be $10, $100. For some of you, it could be $10,000 or $100,000 because you're a full-time investor, right? You could take that little bit of money for you and you could buy Bitcoin with it, and it becomes an asymmetric investment, meaning that the likelihood of you losing that money is very low, but the upside is exponentially high, right? And so today, Bitcoin prices happen to be in the $30,000 range. And so if you happen to buy, let's just keep it easy and say 1 Bitcoin today, well, my guess is by the end of this year, it will have tripled, right? And that's a very bold claim. But again, the reason that it's so important to learn how this technology works at least a base level is because it helps you make better investment decisions. Okay. So this is the stock to flow model. And this is kind of what it really describes. Now, what's going to be fascinating is I told you the true value is 100, right? But I already told you earlier what happens with FOMO, right? The fear of missing out. The same thing will happen at the end of 2021 or 2022, right? So somewhere between now and basically the next 12 months, because we happen to be shooting this in June of 2021, the price will go to 100 and then people will start to pile in. And the newest people who know nothing about it see the number go up and they say, oh, I got to get a piece of this. And they'll drive this price up to a very high number. Now, what is that number? We don't really know. Could be 150. There's a very strong argument for 180. There's a strong case for 200, 220, 288. There's even a very bullish case of $388,000 for 1 Bitcoin, which means that would be a 10x on every dollar that you put into the market right now. Now, I'm not telling you to do that, and there's no way to time the top, right? There's really no way to know how much people are going to put into this. Right. And so you never want to bet on human emotion. What you want to do is you want to learn a little bit about how human emotion works and how that looks on the charts. And I'll teach you more about charts as we go forward. But what I want to do is just simply explain this concept. This is really what you got to understand from the concept of where does it get its value and why do I believe it's going to go up? We believe it's going to go up based on the stock to flow ratios that have been produced and the consistent data points that we're tracking. Now, here's the thing. We could be wrong. And I'm sure everybody who's watching this, you will hold me accountable, and I count on that. But after doing this for several years and continuing my education in this, what I'm finding is actually more validation for why it's working rather than not working. Now, I may not be able to tell you the price on the day, right? I can't say on December 31st, it's going to be this price. But what I can say is in the next year, in the next 2 years, it should be around $100,000. And guess what? That means in the decades to come, it will end up being $1 million, right? And what we could talk about kind of the future on another video, but this really helps you to kind of better understand. Now you've taken action, Arlene, you've got in the game and you've seen what that looks like. Now you're starting to build your education a little bit about kind of what the value is behind this and kind of where it's going, right? You got in a time where you bought it around $30,000 range. So any dollar that you put into this, guess what? you're probably going to double or triple that money in the next 12 months, right? And I could be off by 6 months or so, but we happen to have a model that shows this. And this is just one model, but I think it does a really good job of explaining kind of the why behind the value, right? So for the rest of you who are watching this, I hope that was helpful. Definitely, if it was, man, please like these videos. It tells us that we should put out more content like this. It obviously supports the channel. We love for you to subscribe to one, just get more information, whether you're brand new, whether you're kind of at an intermediate level, or even if you're an advanced. We'd love to talk to some of you about some advanced topics that I think would help some other investors or crypto traders even, right? But definitely like and subscribe to the channel. And if this is a better explanation for how this works, take this video and share it with family, share it with friends, right? Help kind of spread the word of how this works, because what I don't like seeing is people getting in, they're buying crypto and they have no idea what they just bought. And if you've heard my story before, that's how I got in, right? I got in just being competitive and wanting to make money. This makes a bad investor. So we want to protect the money that we make. We want to build our wealth, and we're going to do that. And I'm going to help you do it. So until we meet again, we'll see you guys on the other side. Arlene, we're going to be talking very soon about the next questions that you have and kind of how you're progressing into what your journey looks like. Right? I know you've got a couple other questions. We're going to talk about how to buy it, how to sell, and the timeframes to do that. We're also going to talk about how do we transact? How can I, in this country, send Bitcoin to you in this country? And why can it happen like that for free or an insanely low fee versus if I was to send you a wire right now, it would take 3-4 days, as well as a pretty sizable fee, right? So we're going to keep digging into it. If you've got some more topics that you're watching and you would like us to cover something, use the comment box here in YouTube. Please type it in. I'll respond to you. I would love to hear from you on maybe you disagree, right? Tell me where you think I'm wrong. I would love to have your input. My desire is not to be 100% right. My desire is to grow in my education. I hope yours is too. Let's do that together. So bring your knowledge to the table, bring your questions to the table. Let's keep taking one step at a time. Until we meet again, we'll see you guys on the other side, and we'll go from there.